Hi, it's September 13th, Friday. The market's closed, and we're going to do a quick brief update. We're going to talk about where we are in the market right now. We're going to talk about the Fed meeting next Wednesday and what we expect and why we think they're going to go a quarter point instead of the half point that they should be going. And then lastly, we're going to talk about what we expect, how the market to play out between now and the end of the year. So just jumping into it, on August 20th, we took our position to a hold. You can follow us on the market insights section of our website. If you haven't done that yet, and you find that, you'll always know whether we're in the mode of feel it's safe to be putting money into the market. If we're not putting money in the market, just doing some more research and looking at things and waiting for the next pullback, or if we're lightening up or de-risking the portfolio if it's gone up too much and gotten out of balance a little bit. So we went to a hold on August 20th at a market peak. The market went sideways for a week, and then no surprise to us from our short-term indicators, the market rolled over pretty hard the first week of September. So between, we dropped in the first week of September 4.3%. We did our last video on September 5th, and we did say that we were very close to a buy signal. Well, that was a Thursday. The following Friday morning, September 6th, the market got trounced again, and we triggered a buy signal, and we put it up on the chart. We loaded it up online. And we are now up in the 5 trading days, just 5 trading days, we've bounced 4.21%. So very strong week. It's funny too, because we're very clear about this, September is the worst performing month in the calendar year, historically speaking, for the data that goes back 95 years to 1928. So for us to put a buy signal, actually do some buying, 1 week into the worst month of the year, showed you that the market got really oversold. We are not overbought yet. We're doing a little bit more buying. We bought every day throughout the week, a little bit more today. But we're going to get close to an overbought market. We're going to put ourselves onto a hold. It just simply means that we don't think the entry point is good. When we're buying or lightening up, there is a better than 50-50 shot the trade is going to be profitable in the next couple of months. Doesn't always mean we pick the low. It doesn't always mean we pick the high. What it means is that we are looking for entry points, right? As we said all the time, the market is a series of stocks or a series of companies that earn a revenue stream, and the market is there to serve you. So how does it serve you? Buy low, sell high. And low only shows up when there's lots of bad news. So you have to train yourself to be able to buy those dips despite how horrible the news sounds. So so that's where we are in the market. We're still in a buy. We're still putting a little bit of money to work, but we are getting close. So I would really up here recommend that you go patiently, to have a little bit of patience, wait for the next pullback. You can just follow our charts, because that's what we're doing with our money that we're in here with. So that chart is very effective and very helpful to look at. It's not a guarantee. It's just a guideline. You'll also notice we really don't put sell up there anymore, right? There's buy, hold, sell. We don't put sell anymore. And the reason we don't do that is we are long-term investors. We don't want someone reading this that is going to blow out of their portfolio and generate a bunch of capital gains and have to pay taxes on those. So really what we do is we're either putting money into the market or we're not, and we're in a hold. And we will post on there de-risk when we think it's time to rebalance out of some risk assets back into safer stuff. So moving on, so next Wednesday, February 18th, the Fed meeting. They're going to do their press conference and their announcement, and we are expecting a quarter point cut. And we said in our last video, we think they should be going a half point. Hands down, they should be going a half point, not because the economy is slowing down too much. The economy is slowing down, right? The number of new jobs created every month has been going down steadily. We're now under 200,000 solidly. And the unemployment rate's been ticking up from mid 3s, 3.5%. It's now at 4.2%. So, and then you've got inflation down under 3%, pretty much across the board. So let's just say it's 2.5%, 2.7%, depending on the metric you use. There's no reason for us to be this restrictive. 5.5% overnight lending rate when the 10 years at 3.65 makes no sense. It's just way too tight on the economy. Why do I think they should go half? It's not because the economy is so bad. It's because it takes 6 to 9 months for an interest rate cut or hike to work itself and do the desired effect in the market. So they didn't go in July, which means they went. They're going to go a quarter in September. They waited August and September, 2 extra months. They go there. It's 2 extra months. The economy's slowing down, and again, it's got real inertia. It's going to keep going down if they don't, unrestrict money. So if they cut a quarter, that means it's not really going to hit the market till February at the earliest, probably more like March or April, and it's only a quarter of a point. It's not going to do that much difference. And then the next meeting is not in October, but it's in November. So then they're going to go all the way to November, 2 more months. very far from the July meeting, right? And that interest rate cut is not going to have an impact until next summer, like June, maybe. And you're going to go from now to June, and you're going to go from 5.5% Fed funds rate. They say 5.25%, 5.5%. It's going to go to like 5%, 4.75%. Again, that's just way too long to be up that high. Which means if they don't go a half, and they won't, they would be targeting if they'd go a half. They're going to have to do more at the probably by the December meeting. They're going to be in a little bit of a panic mode. But again, we'll see what happens. Now, let's get to how we see the rest of the year. Nothing has changed from our September 5th video. We like it into year end. That being said, we're in September. We respect it. We also have the election coming up in the first week of November. So the market really does well when things are certain for the outcome. So when there's uncertainty, like an election, two very different candidates that are neck and neck pretty much. They're flipping back and forth. The market's not going to be able to advance because they're very different policies. I'm confident or feel strongly that no matter who is elected, the market will do well into the year end for several reasons. But one is just the underlying fundamentals of corporate America are that strong. Yes, the consumer is weakening. But corporate America, the amount of cash sitting on the balance sheets of a company, they're going to be able to withstand anything, and buying back stock and reinvesting, paying out dividends, reinvesting in their future development, making acquisitions. Right, they're going to grow. So the market's going to like that. So we don't care what candidate gets in from an investor's point of view, but as soon as we have it, assuming there is no mess for the following few weeks after the election, if it isn't too close, if there's a definite winner, then the market should build up strength. And 2025 is looking really good. The only concern I can fathom that could be bad for the market is a geopolitical event that we can't forecast. So it could be something in the Middle East spirals out of control, something in Russia, Ukraine, etc., or something new that we can't see coming. Other than that, I think it's all green lights once we get into mid to late November, assuming the election comes through clean. So that's it. That's a quick update today. We like it, but we're kind of in a pause. We'll probably go to a hold here in the next couple of days if the market keeps acting strong. But that's it. Everyone have a great weekend, and we will talk to you real soon.